Hey folks, Dan Frio here, the rate update. Today is January 14th, 2021, and I don't know if yesterday I said 2020, so I apologize if I did that. So let me give you an analogy of what I'm thinking of the market right now, the stock market in general. Jobless report just came out, and it's just absolutely horrendous. Okay, then you flip over to the next page of the news, and the stocks just hit another all-time high, or darn near it. So you're out of work, but people are investing. How does that make sense? Other than what my prediction is, what's coming later today between President-elect Biden and Federal Chairman Powell. So don't go away. We'll be right back to discuss all of it. Okay, so here's the headlines. Jobless claims surged to highest weekly total since August. So that's telling us there are millions of people out of work. Okay? So you would think people are going to get behind on their bills, they have no excess money, all this other stuff. That would be my first assumption. Then you flick over and holy moly, the stock market's up 100 points. How can that be? Well, let me give you the playbook for today. Here's my assumption what's going to happen today, and we'll play this back tomorrow and see if I nailed it or if I was completely out in left field. So let me lay out my plan here for today, how I think it's going to unravel. President-elect Biden's going to come out and talk to everybody, and he's going to come up with a new stimulus package on top of the one that they already did for $900 billion. Here's what my thoughts are, because the Democrats were pushing for increased unemployment benefits and so forth. So here's my layout for this plan. They're going to introduce new stimulus checks to everybody, and it's going to get to that $2,000 range. So they already kind of approved the $600 check, but they're going to increase that, I bet you, up to $2,000 per person. They're going to probably come back through, and this is rumors that I hear, is give some tax credits and other things for kids. So if you have kids under, let's say, 6, they're going to give you a tax credit. Kids from 6 to 15, another tax credit, and so forth. So there's going to be a lot of tax incentives in this proposal. They're also going to come up with a state and local bailout of state and local governments. And I saw this playbook back at the beginning of the pandemic, especially in some cities such as New York, Chicago, and areas in California. And they're going to come up with a stimulus package to help states and local municipalities. That's what's going on there. Okay? And then there's going to be a bunch of other perks. Some pieces of the government want the protection that if somebody gets COVID at work, you can't sue your employer. That's kind of on the fence. That could be a big one. But you're going to see an increase of the stimulus package from $900 billion. I'm saying to record amounts, $2 to $3 trillion. Okay, that's my expectations. So then Federal Chairman Powell is coming out later, and he's going to talk about what the Fed's position is on all of this. So let's look at this. They're going to introduce this package of probably $2 to $3 trillion, and you can say I'm nuts. We're going to come back to this tomorrow and recap it. So that's going to put a glut of treasuries out there to fund this thing. So you have an oversupply of something. You're going to have prices dip, and what do we all know about bonds? As you pay less for a bond, it gives you a higher rate of return or a higher yield. So the assumption here would be now Treasury prices are going to jump. Well, Here's some other news in the market that we're going to focus on, right? I think this is here. Rising rates have traders debating trigger point for stock upsets. So you're going to have the Treasury yields starting to increase. Well, the stock market plus housing market and everything else doesn't want that. They don't want mortgage rates to skyrocket because you have a lot of people in forbearance right now. So they don't want to throw more fuel on that fire. And the stock market is giving everybody sanity right now. So you're going to have the Fed step in and ease the markets. Okay. So then what's that going to do to the dollar? Well, you see the dollar right here strengthening. That doesn't make any sense, because if you're going to put a glut of treasuries out in the market, you're devaluing the dollar. So this doesn't make any sense. You're going to start seeing this ease back fairly quick once all the talks are presented later today. You can see the 10-year treasuries, and the treasuries are up, and I'm going to give you that right here. So this is what's happening right now in the mortgage-backed securities market, and this is why people follow my channel. We follow this number here because this is the key component or investment or tool, is the biggest part of mortgage rates. It's called mortgage-backed securities. This is saying the price of mortgage-backed securities is down 8 ticks. And again, when prices go down, yields go up. All right. This here is basically what's telling us on the 10-year treasury. What's going on with that? That's up. So the markets are they need to come back in line to figure out, give direction to the markets and put ease on all the markets, the stocks, the bonds, and everything else. So then we go to the cryptos, and I think I have those here. And when we see the dollar usually rally, you have a turn or an offset or a reversal or a flip-flop of that with Bitcoin and other cryptocurrency. So when usually the dollar's getting stronger, cryptocurrencies are getting weaker. Well, let's go to that. And again, none of this is making sense. We have Bitcoin up 14% in the last 24 hours. Okay, so how does this make any sense? You're going to have, and again, we'll play this back tomorrow, you're going to have President Biden stepping in, or President-elect Biden stepping in, most likely pushing up a huge stimulus package, thus should push up Treasury yields, drop the dollar's value. Nothing is playing out right now. So I'm expecting at some point, it might not be today, but there's got to be a correction in the markets. And hopefully there's an easy transition of power from President Trump to President-elect Biden, because if there's other huge turmoil, this could delay a lot of this stuff. We need the stimulus package. That's all that there is for the short term, because otherwise all this stuff is going to crash. So right now, my prediction is I'm fully vested in stocks, cryptocurrencies. I really don't hold any bonds. I'm not a financial analyst. I'm not giving you recommendations. You can't call me and buy stocks. I don't do that for a living. I'm just giving you what's up here, what I'm doing personally to give you my take on the markets, the stocks, the bonds, the cryptocurrency, and real estate. I have a new acronym for all this. It's called SCRB. SCRB, stocks, crypto, real estate, and bonds. So that's basically what I'm going to start titling this, Scrub, my morning Scrub update. So that's what I'm looking at there. My trade today is Bitcoin. Why? Because if we throw all this money out, $2-3 trillion in stimulus, it's going to push the value of the dollar down, devalue the dollar, push up mortgage-backed securities and treasuries. It should, thus creating a bigger run in cryptos. Is again, as we see right here, Bitcoin is up 14%. 14%, people, in 24 hours. If you're a believer in crypto or not, it is the wave, and I'm doing as much studying about this as I can, and it's going to take, folks. So if you're going to jump on the bandwagon, you can fight it all you want, but you're going to miss out on a lot of profits there. That is it for today. I will be doing my mortgage report later this afternoon, probably about 3 or 4 o'clock, plus posting stuff on my social media to give you updates on what's going on throughout the day. Once President-elect Trump has a speech and the Fed comes out, maybe we'll recap things and I can say, I told you, or I can come back and say, boy, I completely missed that one. We will wait and see. So take care, guys. I'll see you later this afternoon. Bye-bye.